Coolabah Capital Investments is Australia's leading active credit manager with 47 professionals spread around the world, responsible for running over 10 billion in funds. The team includes 11 traders and portfolio managers and 18 analysts, spread between London, Sydney, Melbourne and Auckland. And most of these professionals have technical quantitative backgrounds. Applying up to 80 proprietary bond pricing models to find mispricings throughout the world, Coolabah is one of the most active traders of bonds globally. We typically trade over $700 million of bonds a day, and in 2024 to date, we've turned over more than $50 billion. Coolabah's edge is really around finding mispriced bonds that are paying too much yield for their risk. So we want to buy a security that may be paying, say, a 6.15% interest rate, where our fair value is around 6%, and as the rate mean reverts to fair value, we get capital gains on top of our yield. Since 2021, we've seen a huge increase in interest rates. The RBA's cash rate has jumped from just 0.1% all the way to 4.35% today, and there are risks it could rise further. Over this period, floating rate bond strategies that benefit from higher yields have outperformed, and now investors are thinking about trying to lock in very high interest rates through fixed rate rather than floating rate bonds. Coolabah manages Australia's best performing fixed rate bond strategy, which is called the Active Composite Bond Fund and trades under the ETF ticker FIXD. In the 12 months to March, FIXD returned 6.4% after fees compared to the benchmark, the Composite Bond Index, which delivered about 1.5%. So outperforming the benchmark by about 4.9% after fees. Since its inception in March 2017, FIXD has outperformed the index by about 1.3% annually after fees. FIXD always provides the same fixed rate bond exposure as the benchmark, the Composite Bond Index, which today is about 5 years of fixed rate bond duration. Fixed rate bonds are going to significantly outperform floating rate notes if interest rates in the future are expected to be reduced meaningfully, especially if central banks are worried about the outlook because, for example, we might be heading into a recession. And interest rates could fall meaningfully because the RBA's cash rate is at 4.35%, and whilst it might rise a little bit further, remember back in 2022, it was just at 0.1%. If you're buying a fixed rate bond with 5 years duration exposure, every 1 percentage point reduction in interest rates will increase the value of that bond by about 5%. So if indeed we do head into a recession and interest rates are reduced materially, fixed rate bonds have a very good chance of outperforming many other asset classes. Coolabah's Active Composite Bond Fund, or FIXD, also has the appeal of a much higher running yield in gross terms than it's had in the past. Today, it's around 6.6%. Now remember, past performance is no guide to future returns, and you should read the product disclosure statements to better understand their risks. We also recommend speaking to a financial advisor to better understand your personal needs.